let's get straight to it, guys. Okay. Okay. So today I want to talk about how I personally scan for new setups. Okay. So every day, before in the evening or before the market opens, I'll take a few minutes and I will go through my charts to see which setups will look good for the next, not just today, but the next few days. So I'm looking to plan like at least 7 to 14 days ahead to see which setups have the best chance of success going into the next week or two. So the way that I do it, I think would be best to describe it is to show you a recent tweet which I shared on the Trader Stewie Twitter stream, and I'll go through it and I'll explain to you exactly why these charts, why they stood out versus the hundreds and hundreds of other stocks that are out there. Okay, so for example, I don't know if you guys remember this tweet here from August 19. I said, study these 4 charts very carefully. Okay, so we had GRWG, EXPI, APPS, and HOME. And I wrote here, they all turned into huge winners, but they all have a few, like a couple of things to be exact in common. Maybe like 2 or 3 things in common. They all turn out to be huge winners, okay? As you can see here from the charts. So, but hold on. There we go. So the first thing I want to look at when I'm looking at a chart, obviously the most important thing for me is the stock in an uptrend or is it in a downtrend? That's the number one thing. That's extremely important because now you will know what kind of stock you're dealing with. The second thing I'm looking at, obviously price. So we talked about whether it's an uptrend or downtrend. So this stock, for example here, APPS, clearly in an uptrend. Okay. However, how do I find a stock like this? How do you find stocks like this in your? So what I do is I subscribe to 2 websites. One is finviz.com. Okay, so finviz.com, and then stockcharts.com. And what I do is every single day after the market closes, actually most of the time, even while I'm during the day, during trading hours, I will go through this routine. I go through it over and over and over again throughout the day, multiple times a day, sometimes even. So I'll go here on finviz.com. I'll click on here on the scanner. I start to screen for new ideas. I go up here for change. I'm looking for change. And I go here and I press ascend because I'm looking for stocks that are showing the biggest upside potential. So the ones that are moving the highest on the day, the highest percentage movers on the day. Okay, so right here, and then I'll go to, 1 second, please. And okay, so here, I'm looking for the biggest percentage movers. And I'll click on current volume. I'm looking for volume of at least 500,000 shares or more, at least. And I'm not looking for penny stocks here, so I'm looking for stocks that are at least $4, $5 or above. Okay, so now what I do is this is what Finviz gave to me. Okay, so this is the search criteria based on Friday's close. So 500,000 shares or higher, $5 or above. And I'm looking for percentage gainers. So the biggest percentage gainers, and I'll click on charts right here. And now I'm going to go through each one by one to see which ones fit the criteria which I'm looking for. I'm looking for, the number one thing, I'm looking for stocks that are going to be in a general uptrend, okay? So, and then the number 2 thing I'm looking for is something that I call a power earnings gap. Okay, you guys heard me say this many times before on Twitter. PEG, P-E-G, power earnings gap. What a power earnings gap is, this is extremely important to my strategy because most of my ideas are going to come off from the power earnings gap. Whichever stock makes the power earnings gap watch list, these are the stocks that are going to be the core list of stocks I'm going to be watching on a daily basis. So then what I do is now, what a power earnings gap looks like, for those who are not familiar, you can go to my blog, by the way, and you can check it out there, the impatienttrader.blogspot.com. And you can see I have a bunch of free educational posts. I've been accumulating these posts for the last 13, 14 years. So it's all lots of tons free educational stuff there. So what a power earnings gap is when a stock announces earnings, okay, the usual reaction is a gap up, okay, a gap up. So here, for example, like this stock right here, AV, hopefully you guys can see it well on the screen there. You want to see a stock that gaps up. Since it's earnings, obviously the volume is going to be very, very huge, okay? It gaps up, but you don't want a stock that gaps up and then just kind of fades down and then loses momentum. You want a stock that gaps up and holds on to the majority of the gains. Ideally, you want the stock to gap up and then keep running, just like this one did. See that it gapped up right here, and it just kept running the entire day. This is exactly what you want to see in a power earnings gap. Now, there will be some stocks that gap up, run for a little bit, and then kind of fade back a little bit, and then give back some of the gains. And as long as it stays above the opening gap low, as long as it maintains above the low, that is technically a power earnings gap. As long as the majority of the gains are held after the gap up, I will add this stock to my watch list. Okay, so I will go after I find the stock, after I find it on finviz.com. You know, I'll make sure, let's say, for example, like this Flex, for example, right here. See that? It gapped up right here. It made a huge 12% gap up. That's a pretty big move. It gapped up, and look at that. It gapped up, ran up here, ran up intraday, and then gave back, but it still stayed above the opening gap low. It still stayed above that. So therefore, if this was an earnings gap, if this gap up in FLEX, if that was an earnings-driven gap, I would go to stockcharts.com and then add Flex. I would add it, and I'll annotate it to make sure that I know that this was a power earnings gap. Okay, right there. I will annotate it, and I'll say power, and I'll add it to my power earnings gap watch list right here, and I'll save it. And then now what I do is I go to my power earnings gap watch list, and every single day I will run through my watch list. Every single day, multiple times a day, I'm running through them to see what does the progress look like in these stocks. Some of these stocks you probably recognize from Twitter that I posted on Twitter recently, like this Apple, for example. Power earnings gap. The stock gapped up here in late July. It gapped up, and look at that. It kept rallying and closed at the high of the day. That's a very strong power earnings gap. Very strong one. Definitely have to keep track of that. Definitely. These are the strongest stocks. The idea is, you know, as a swing trader, and specifically a momentum trader, you always want to buy strength. You want to buy strong stocks as they're getting stronger. Okay, so strength begets strength. You know, you want to buy the strongest stocks, because the strongest stocks are going to be the ones that you look back 2 weeks, a month, 2 months from now, and they're going to be much higher than where they were when the move first started. I mean, I've shown you guys many charts on Twitter where I showed you a power earnings gap, and then you look back a month or 2 or 3 months later, and then the stock is way higher. You know, shown plenty of examples of that. You know, so Apple was a perfect example. And the idea is, when you have a power earnings gap, the idea is you don't want to buy it like right away. You know, you don't have to do it like that. What I do is, when I see a power earnings gap, what I do now is I just wait. All you have to do is just wait, be patient, and then wait that there's going to be a setup of some sort coming later down the road. There always is a setup. There always is a pullback, a bull flag, an inside day candle, a holy grail setup. There's always going to be a setup of some sort at some point later down the road. So that's one thing you have to be extremely aware of, and you have to have the patience and be willing to wait for a proper setup to emerge. And they always do. They always do. You just have to be patient enough and allow the time to develop properly. Okay, so now going back to that Flex, as you can see here, it gapped up 12%. You know, but however, look here. See that? This was October. Earnings are on October 29. So this was not an earnings-driven gap up. See that? So technically, it should not be added to the peg list. However, I'm just giving an example. If it was an earnings-driven gap up, you would be adding it I would be adding to the peg list. And what I do now is I'll go through each one individually and look at the charts and see which ones looks most appealing, which ones fits my criteria the best. I'm looking for stocks in a good uptrend. For example, right here, this is a good one right here, Duluth. And you can see how it made a big gap up on Friday and closed pretty strongly, up 11%. You can see how it bottomed out here in May, in April, and March. It bottomed out. A nice Jennifer Lopez bottom here. Rallied, made another beautiful digestion coiling pattern here, very beautiful, and it kept running up. And on Friday it gapped up. Let's check if it was earnings. Earnings come out on September 3rd, so obviously that was not an earnings-driven gap up. So, you know, I will skip this one and keep moving on until I find a stock for, like here's another good example right here, NIU. Okay, a Chinese auto manufacturer. I checked the date, August 17th. This was on an earnings-driven gap up, but look, very strong stock, trending higher. So this would be a stock chart that I would be interested in. Had it gapped up on earnings on Friday, if this was an earnings gap up right here, I would be adding this one to the peg list. But it was not, so I'll just keep going until you literally, it's a manual labor job. You have to literally just, you know, roll up your sleeves and start looking one by one. Take your time and look for the best charts that fit your patterns, that fits what you are looking for. You know, now once I have my peg list all lined up, what I do now is I will literally go through them every single day. Here's AMD, for example, another AMD stock which had a power earnings gap in late July. You see that it kept running. It had a peg, kept running for a few days. And, you know, look, and it looked like at some point it looked like it was never going to pull back. But guess what? It does. They always do. And this one pulled back nicely here, tested the 50-day moving average, and look at that. It started to create a wedge, and it started to rally again. So you can see how, you know, like the strategy. It's a very, very good strategy. However, you know, the peg, the power earnings gap on its own is not enough. You have to have volume. And not just any kind of volume, you have to have accumulation volume. This is where you see institutional buying, which is very, very, when you look at the charts. Let me just show you a few examples here of what accumulation volume looks like. Okay, here's a good example right here in PEIX. Okay, hopefully you guys can see this chart pretty well here. Look at that. So PEIX, this is what some of you who follow me on Twitter, you probably know this one. You probably seen me tweet about it several times. When I saw the stock, I loved it instantly. Okay, why? Why did this stock catch my attention more than any other stock? How come? Well, three things actually. Number one, it bottomed out here. Okay, in the summertime, and it started to move up, so it became in an uptrend. See that? The trend started to shift from basing to back to uptrend. But however, much more important than that, we had a peg. We had a peg candle here in mid-August. So boom, right away, this stock now catches my attention. It pops up on my FinViz scanner, and now automatically I added to the peg watch list, and now I'm watching it. But however, this stock I like it even more than the average one, because look at can you guys see this volume patterns down here? Look at that. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. There's a bunch of them. Bunch of accumulation volume days. Accumulation volume basically means when institutions, when they come in and they start buying stock in mass. Okay, obviously institutions, they're the smart money. They're the ones who do the research. They're the ones who have analysts who go in. They talk to the company, the CEOs. They talk to their customers. They talk to their suppliers. They talk to their clients. They talk to everybody. So when you start seeing institutions like big hedge funds or big funds that are piling into a stock, like in this dramatic way, as you see here, this is something that should catch your attention immediately. Immediately, you have to know this stock, it needs to be watched. So this one right here, as soon as I saw this, I got very excited because I knew this is something. This is going to be something very, very special, and I knew that we had to keep watching it. So you have a power earnings gap. and you have accumulation volume. Those two together, power earnings gap and accumulation volume, those two together are going to be some of the most powerful things that you're ever going to want to have in your arsenal. Okay, so I've talked about it here. Look at that. The biggest winners have the killer combination of PEG, power earnings gap, plus accumulation volume. When you have those two things together, plus a stock in a general uptrend, now you know that you just found yourself a huge winner, and this stock has to be watched. And you don't have to watch it like for a week, or, or a couple of days. Add it to your watch list and just watch it. Keep it on there and just see how the volume patterns progress. And you'll see that more likely than not, when you see a peg followed by accumulation volume, you will be impressed of how most of these stocks will do over the next few weeks or to few months. Okay, so if you guys forget everything I said today, just remember peg and power accumulation volume. Peg and accumulation volume. Those two together are going to help you find the biggest winners the stock market has to offer. And here's another one another example I posted recently, which is EXPI. You guys remember this one? I tweeted about it like back in about 2 months ago, back in mid August. What caught my attention? Obviously, we have here much higher volume up days. Look at that. On the up days, the green days, the volume is much higher than it is on the red days. So that tells you institutions are piling in. Institutions are jumping into the stock. This is a stock that has to be watched based on that alone. However, now look what happened here in early August. You can see it had a peg. It had a power earnings gap candle. Okay, so that right there now makes the stock extra special because now you have accumulation volume, uptrend, plus peg. So now you know right away you're going to have a big winner on your hand, and this one has to be watched. Now, does that mean that you're going to go out and buy it immediately? I mean, I've seen some people on Twitter do it, and so apparently some of them have done well doing that. However, what I like to do is I like to just wait for some kind of a setup. Sometimes the setup, it can come like in a week. Sometimes it can come in 4 weeks from now. Okay, I don't know. I don't know when it's going to come. But all I know is that it is going to come. That's all I know. I don't know if it's going to come in 5 days, 15 days, or 35 days. I don't know when it's going to come. All I know is that a setup is going to come. And lo and behold, in EXPI, when it popped up on my radar and I tweeted about it in August, in mid-August, it took about 2 months for the stock to set up. See that? So let me go through it here real quick with you guys. This is the EXPI, okay? So you can see here all the accumulation volume patterns right here. Boom, 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 boom. They're all there. And then the peg candle came in early August, okay? The peg candle came in early August. It came in about right here, I believe, okay? So now what happened, the stock ran up and it kept running. It literally went from 24 to 46. Okay, so you're talking about over 20-point run here, okay? Over 20-point run in the stock in basically 4 weeks. And obviously now you're getting some serious FOMO at this point. You're like, oh my God, what the heck? Why did I not buy it when it first popped on my screen? However, like I said, every stock is going to go through a setup. It's going to set up at some point. Like I said, it could take 5 days, 15 days, or 50 days. It doesn't. I don't know when it's going to come, but it is going to come. So as you can see here, this setup right here, this is the setup that I posted on Twitter, literally like a few days, maybe 2 weeks ago. This was the setup that I said to watch. You can see how the stock ran up 20 points. It took, and I had to wait 4 weeks for the actual setup to start. For the stock to actually start signs of a pullback. And you can see it went from $46.50 down to $35, pulled back in 3 days, made a reversal candle here, bounced, and it kept bouncing around a little bit here. And now look how now you can start to see like a pattern starting to develop, a beautiful like bull flaggish type pattern. And you can see here, here's the actual tweet itself, where I said EXPI on October 4th. So you can see how it popped up on August 10th, and we had to wait till August 4th before the actual setup started to emerge. I can see, remember here, I don't know if you guys remember this on Twitter. New long setup to watch next week. This was on Sunday night. New setup to watch next week. From the PEG watch list, look for a fresh breakout through 46. Targets 55, okay? So boom. Now, why did this one catch my attention on that particular day? Well, because it still remained very constructive. It bounced around here for a little bit. It digested, and you can see how it made a huge big candle here. This was on Thursday. This was the Thursday right here. Look at the volume. Huge volume. So volume patterns still coming in huge in the stock. Okay. And then and look at this. And then look on Friday. So this was the big volume day here was Thursday. Right here, this candle here, this beautiful candle here, is called an inside day candle. Okay. That's where the inside day candle is where the highs and the lows of that candle falls within the range of the previous day's high and low. So as you can see, this candle here, the high of this candle and the low, what was within the high and low of the previous day range. That makes it an inside day candle. So you have an inside day candle right here. You have a high volume move on Thursday right here. So that tells me that come Monday morning, this is a stock that needs to be watched. Okay, breakout over 46. Why? Because look at the high here. The high on Thursday, the high volume candle day right here. The high on Thursday was 45.87. So we knew that a breakout through 46 was going to be a very, very key important area to watch. Plus 46 was resistance on the first high, 46.50. 46 was also a high here on the second peak. And look at that, on Thursday we had a peak at 45.87. So we knew that 46 was going to be a very important point to watch come the new week. Okay? So now what happens on Monday? We walk in on Monday and the stock did, okay, so here's the setup. Walk in on Monday and then boom. On Monday, this is what the stock did. Huge move here, EXPI. Obviously, I missed this one because it literally gapped up within a couple of minutes after the open. It gapped up over Friday's high and then just kept running. Look at that. It shot up 16.5% on that day. Explosive move. But what I want you guys to take away from this is when you have a power earnings gap with accumulation volume, time and time again, you will see the biggest winners are going to come off that when you find those criteria. And you can see how EXPI kept running for a few days. It kept running it kept running way, like almost for 2 weeks. Here's the final chart, as you can see. Look at that beautiful run. It literally went from, so we had a 46 breakout, and it went to as high as $60. $60 earlier this week. So in 1, 2, 3, 4, 5, 6, 7, 8 days. In 8 days, and it went up straight pretty much. My target was 55, as I mentioned here. The target was 55, so it went well above the target. It hit 60 earlier this week. So you can see how these stocks, when you find that combination of volume plus PEG, and then you add like the basic technical, where you're going to be patient. Look for bull flags. Look for wedges. Look for these patterns. These are patterns that we can maybe save for another webinar or talk about it on another day. I'm not sure how much time do I have. So the bottom line is I'm here today to tell you guys there's 2 things. Okay, power earnings gap, accumulation volume. Add those to your arsenal, and I bet you anything you will see a huge improvement in your bottom line. That's all I gotta say. I hope this was helpful.